All right, picture this. It's 2010. The internet for some folks still sounds like a robot arguing with a fax machine. Dial up anyone? Social media is basically just poking people on Facebook, and this newfangled thing called Bitcoin is kind of just out there. The price, a measly 10 cents? Yep, 10 cents. Now, zoom forward to May 2025, and that very same Bitcoin has blasted past $112,000. No, that's not a typo. We're seriously talking about turning the kind of pocket change you find smushed between your sofa cushions into a fortune fit for a king. How in the digital world did a bunch of early birds turn these internet pennies into life-exploding riches? You better stick around, because this story is wilder than a room full of cats with laser pointers. Okay, let's be real. If someone sidled up to you in 2010 and said, "Hey, this weird internet money, whipped up by some super mysterious dude named Satoshi Nakamoto, is going to be worth more than a house someday," you'd have probably gently offered them a tinfoil hat, right? Bitcoin. Back then, it was like a digital unicorn. Something whispered about in nerdy online forums. Maybe used for a few, let's call them niche internet buys. But a handful of brave, curious, or maybe just plain lucky people decided to toss a few bucks at it. Literally pennies. And those pennies? Oh boy. They went on a ride that makes most theme park roller coasters look like a casual Sunday drive. This isn't just about the eye-popping numbers. It's about how a bit of belief, a dash of daring, and a whole lot of hodling that's hold on for dear life if you're new here cooked up a new batch of ridiculously wealthy folks from, well, almost nothing. We're about to peel back the layers on this unbelievable story of wealth creation, from practically worthless to call your financial advisor and just scream into the phone rich. So let's paint the picture. 2010. The very first iPad had just been unveiled. Instagram wasn't even a thing yet, and the whole idea of digital money was, yeah, a bit out there. Bitcoin wasn't even a toddler in the big, scary world of finance. It was an infant, barely making a coup. Born in 2009, its price in early 2010 was, and I really can't say this enough, teeny tiny. We're talking prices fluttering between 5 and 20 cents per coin. Just think about that. For the cost of a gumball, you could have nabbed a Bitcoin. Who was even gabbing about it? Not your bank manager, that's for damn sure. It was more like a playground for cryptographers, tech fanatics, libertarians dreaming of a bank-free world, and maybe a few folks who just enjoyed collecting odd digital trinkets. Trying to explain Bitcoin to someone back then? It was like trying to describe the color red to someone born blind, but you could only use interpretive dance. Seriously. It was mostly traded on obscure forums or directly between people. The first ever recorded real-world Bitcoin transaction? That legendary moment belongs to Laszlo Hanyecz, a programmer who famously swapped 10,000 Bitcoin for 2 pizzas in May 2010. Those pizzas, if we use Bitcoin's peak of $112,500, would be worth, get ready, over $1 billion. I truly hope they were good pizzas, like the best, most spiritually enlightening pizzas ever made. The vibe was a weird mix of electric excitement and deep, deep skepticism. For every one person who believed, there were probably 100 calling it a scam, a silly fad, or just internet funny money. And the big financial institutions? They weren't just ignoring it, they were probably having a good chuckle. Little did they know, the digital seeds of a financial revolution unlike anything seen before were being planted, one 10-cent coin at a time. The annual return for Bitcoin in 2010 going from basically zilch to around 40 cents was an absolutely bonkers 30,000+%. But even then, who could have possibly guessed what was just around the corner? So how did anyone even find this digital needle in the vast internet haystack? It's not like there were Bitcoin commercials during the Super Bowl, you know? Early adopters usually stumbled upon it in the dusty corners of the web. Think Bitcoin talk forums, cryptography mailing lists, or maybe through word of mouth from their equally techie, possibly slightly offbeat friends. Imagine your mate, the one who's always tinkering with computers and muttering about the man, suddenly starts going on about decentralized peer-to-peer electronic cash. You'd probably just nod, smile politely, and slowly back away, right? But some people actually listened. Some were hooked by the ideology. This vision of a currency free from government meddling and bank interference. They saw Bitcoin as a kind of digital rebellion. Others were just plain fascinated by the tech itself, the sheer elegance of the blockchain, the cryptographic puzzle of mining. And let's be honest, some probably just thought, hey, it's a few cents, why not? Kind of like buying a lottery ticket, but with more complicated math. Take Mr. Smith, an anonymous software engineer who casually dropped 3,000 in 2010 when Bitcoin was hovering around 15 cents, mostly because his work buddies were dabbling. Or Eric Finman, a kid who was just 12 years old in 2011 who invested a $1,000 gift from his grandma when Bitcoin was about $10 to $12. His reason? If he became a millionaire by 18, he wouldn't have to go to college. Spoiler alert, he didn't. These weren't your slick, seasoned Wall Street types. We're talking students, programmers, activists, and a few curious souls who decided to take a small, almost playful punt on an unknown digital token. Christopher Koch, a Norwegian student, who bought a mere $27 worth of Bitcoin in 2009 for his thesis and then totally forgot about them. Years later, that $27 had morphed into nearly $1 million. Talk about an accidental fortune. These weren't carefully calculated financial masterstrokes backed by years of market analysis. More often, they were leaps of faith, sparked by curiosity or a belief in something new and a little bit rebellious. They were the first ones to answer the call, stepping into a completely unknown world with no map, zero guarantees, and a boatload of question marks. All right, so our early investors have their little pile of digital coins. Smooth sailing to easy street from here on out, right? Oh, you sweet, innocent thing. What came next wasn't so much a gentle uphill walk as it was being strapped to a rocket apparently designed by a hyperactive squirrel. The volatility of Bitcoin wasn't just high, it was the stuff of legend. Imagine checking your investment. One day it's up 50%, the next it's down 30%. That was basically a regular Tuesday for Bitcoin holders. The following years were a dizzying blur of mind-blowing highs and absolutely terrifying lows. In 2011, Bitcoin shot up from 30 cents to nearly $30. That's almost a 10,000% increase, only to come crashing back down to $2 by the end of the year. A 94% correction. Can you imagine holding on through that? Many didn't. Then 2013 hit, bringing another absolutely spectacular run. Bitcoin kicked off the year around $13, then blew past $100, then $200, and eventually peaked at over $1,100. That was a 5,070% gain in a single year. But then came 2014 and the infamous Mt. Gox hack. Mt. Gox, one of the earliest and biggest exchanges, basically imploded after losing hundreds of thousands of its users' Bitcoins. The price tanked, and headlines screamed, "Bitcoin is dead," for the first of many, many times. Bitcoin took a 61% beating that year. Skeptics were absolutely everywhere. Economists, bankers, even your Uncle Barry at Thanksgiving dinner. Everyone had an opinion, and most of them weren't exactly glowing. It's a bubble. It's tulip mania all over again. It's magic internet money used by criminals. The FUD, fear, uncertainty, and doubt, was relentless. And it wasn't just talk. There were real threats. Governments were scratching their heads, trying to figure out how to regulate this wild digital beast, or if they should just try to ban it entirely. But through all this chaos, a community of HODLers started to form. These weren't just investors, they were true believers. They weathered the storms, the hacks, the crashes, and the never-ending chorus of naysayers. They saw the dips not as complete disasters, but as, well, maybe not opportunities right away, but at least not a good enough reason to abandon ship. Some folks, like Javed Khan, started using Bitcoin to transfer money back in 2018 when it was around 3,000. He noticed it kept going up, so he started buying the dips. He eventually bought a Bentley with his profits. The years 2015, 2016, and 2017 brought more growth, with 2017 being another absolute showstopper with a 1,338% gain, as Bitcoin flirted with 20,000er. Then, just to keep everyone on their toes, 2018 delivered another swift kick to the gut, a 73% crash. It was a brutal, character-building, nail-biting kind of journey. So, after years of being tossed around like a Caesar salad in a high-speed blender, what was the secret sauce that separated the insanely rich from those who just ended up with a crazy story to tell? Two simple words: HODL power. Hold on for dear life. It became more than just a typo, it was a mantra, a rallying cry, a way of life for those who truly believed in Bitcoin's long-term potential, or maybe they were just too stubborn, or had conveniently forgotten their passwords, to sell. This wasn't about some genius-level market timing. Often it was about a profound, almost accidental display of what the internet now calls diamond hands. making the decision to hold on while your investment plummets by 70%, 80%, even 90%? That's not for the faint of heart. It's one thing to say you have long-term conviction. It's quite another to watch your digital nest egg seemingly evaporate before your very eyes and still not smash the panic button. Take Kingsley Advani, for instance. He went all in during mid-2017, selling pretty much everything he owned to scoop up $34,000 worth of Bitcoin. Just months later, he was a millionaire. Now that's commitment. And then, slowly but surely, the market started to mature, bit by bit. The Bitcoin is dead headlines started to fade, or at least people began to roll their eyes at them. The price then began its next unbelievable climb. 2019 saw a solid 94% gain, and 2020, despite a massive global pandemic-induced crash in March, somehow finished the year up 302%, smashing through previous all-time highs. Bitcoin was no longer just some niche internet fad. It was starting to get noticed by the big players. 2021 kept the party going with a 60% gain, though not without its own gut-wrenching 50% correction mid-year, just for kicks. Even with major corrections, like the negative 64% drop in 2022, the true long-term believers held on tight. Then came 2023, with a whopping 156% rebound, and 2024 added another cool 121% to the pile. Finally, leading into our current time frame of May 2025, Bitcoin didn't just politely knock on the door of 100,000, it kicked it down, threw a party in the living room, and then soared past 112,000. Some analysts in early 2025 were even predicting Bitcoin could hit anywhere from $120,000 to $200,000 within the year, with a few wild-eyed dreamers eyeing $1 million per coin by 2030. While the start of 2025 did see a bit of a pullback, with a year-to-date figure around negative 14% by May, the overall journey has been absolutely staggering. Bitcoin had reached a market cap of over $2 trillion. That HODL strategy, the one that often looked like pure, unadulterated madness, had transformed into something that looked suspiciously like genius for those who managed to stay the course. So, what actually happens when your digital pocket fluff, the stuff you bought for less than a fancy cup of coffee, balloons into a fortune that could buy the entire coffee shop and maybe the whole dang block it sits on? Well, life changes. A lot. For those early Bitcoin investors who managed to hold on, we're talking about wealth creation on a scale that's almost unheard of in modern financial history. Let's go back to that hypothetical $100 investment in October 2010, when Bitcoin was chilling at around 10 cents. That $100 would have snagged you a cool 1,000 Bitcoins. Now, fast forward to May 2025, with Bitcoin hitting that incredible $112,500 peak. Your initial $100? It's now worth a mind-boggling $112.5 million. Go ahead, take a moment. Pick your jaw up off the floor. If you'd chucked in just $1 back in July 2010, it could be worth around $968,000 by May 2025. That's not just retire early money, that's buy your own private island and name it Satoshi's K kind of money. The stories are absolutely legendary. People paid off their mortgages, bought houses, fancy cars. Yes, sometimes the cliche Lambo was involved. Funded brand new businesses, or simply achieved a level of financial freedom they could only have ever dreamed about. Some became Bitcoin millionaires before they were old enough to legally drink, like Eric Fenman. Others, like the anonymous Mr. Smith, quit their high-paying Silicon Valley jobs to just travel the world. These weren't just numbers on a screen anymore. They were real, tangible, life-altering changes. Of course, not everyone held on to every single coin. Some sold bits and pieces along the way, transforming smaller chunks into significant life improvements. But the main lesson was crystal clear. Those who had the vision, the luck, or maybe just the sheer forgetfulness to hold on through thick and thin, reaped rewards that were, quite frankly, insane. It was the ultimate proof of the power of conviction, or perhaps the power of a forgotten password to a wallet stuffed with digital gold. And so, the legend of the early Bitcoin millionaire was well and truly forged. These folks weren't just lucky gamblers. They became pioneers, whether they meant to or not, of a brand new financial frontier. Their stories are now whispered with this crazy mix of awe, a little bit of envy, and a whole lot of what if. Seriously, what if you just tossed 10, 50, maybe 100 into this weird internet money thing back in 2010? That tiny $100 investment morphing into $112.5 million is a thought that can keep you up at night. Bitcoin's wild ride from total obscurity to a multi-trillion-dollar asset has made most traditional investments look like they're moving in slow motion. Over the past decade, while the S&P 500 gave a respectable plus 179% return, and gold did okay with around plus 181%, Bitcoin delivered something over 48,000%. Some reports show Bitcoin absolutely crushing the S&P 500 and gold by even more eye-watering margins, depending on the exact time frame you look at. Its fixed supply of 21 million coins really fueled that digital gold narrative, positioning it as a store of value in our increasingly digital world. As of early 2025, Bitcoin's market cap was hovering around a colossal $2 trillion, making it a serious player on the global financial stage. Some reports even had it touching 1.92 trillion or even 2.05 trillion. Those early investors, the ones who saw something when almost everyone else saw absolutely nothing, are now part of crypto folklore. They navigated a world of insane volatility, crushing skepticism, and all sorts of technological growing pains. They are living, breathing proof that sometimes the craziest ideas, the ones that everyone just dismisses out of hand, can turn out to be the most revolutionary. So, what would you have done? If you had a time machine and a spare 20 bucks lying around in 2010, would you have bought Bitcoin? Or would you have just bought a few extra pizzas? Drop your thoughts in the comments below. And hey, if you enjoyed this absolutely bonkers ride through Bitcoin history, do me a solid and smash that like button. Subscribe for more tales of financial madness and genius. And maybe share this with that one friend who still thinks Bitcoin is just for buying questionable alpaca socks online. The journey from 10 cents to over $112,000 is way more than just a price chart. It's a testament to a massive shift in how we think about money and tech. It's about the incredible power of decentralized technology, the weird psychology of markets, and the mind-blowing fortunes that can be made, and let's be honest, sometimes lost, at the very bleeding edge of innovation. For the early Bitcoin investors, it was this wild cocktail of foresight, a hefty dose of luck, and an almost superhuman ability to stomach insane levels of volatility. Their stories are a stark, neon-flashing reminder that the financial world is always changing. And sometimes, just sometimes, the biggest rewards go to those who dare to believe in the seemingly impossible, but it also screams about the immense risk involved and the need for an iron stomach. Not everyone who started that crazy journey made it to the treasure chest. It truly is one for the history books, folks.